Alright guys, so things are getting downright bizarre, and let's dedicate this episode to our best friend Scott Bessent. He's the man of mystery today, and his desperate attempt to keep things afloat. Now we know he isn't stupid, but he's more of a salesman than anything else today. And all his attempts to wage a trade war while maintaining the US bond market, they are all melting down. During this recent CBS Face the Nation interview, we are witnessing the meltdown of the US Treasury Secretary. And when we go through this mess, you'll quickly realize that the grand plan is unraveling before your eyes. And let's set the stage here. The US is now extending the trade exemptions Trump gave to China. In other words, Lutnick and Bessent just caved again. This is an extension of the TECO trade. They still need affordable Chinese exports, including smartphones, electronics, and chips. But that's not all the US needs. They require something even more from China, and it's something that Beijing doesn't want to give. Now, Trump wants to reshore critical industries, especially AI chip production, to the US. However, to do that, you obviously need inputs. And guess who holds the cards? It's the Chinese supply chain. And here's how crazy the dependency the US has for China's rare earth supply. Over 70% of imports comes from Chinese suppliers, and that's a phenomenal amount of market share that can't be replaced by any country in the world. If China pulls the plug and refuses to export to the US, production costs for all industries will fly to the moon. Companies from Apple and Tesla will have to spend more to make less. And that's why we have Scott Bessent angry with the Chinese and hinting at consequences for them. But in the same breath, he's on the verge of begging Beijing for a meeting.
Well, we will see what the consequences are. I'm confident that when President Trump and Party Chairman Xi have a call, that this will be ironed out. But the fact that they are withholding some of the products that they agreed to release during our agreement, maybe it's a glitch in the Chinese system. Maybe it's intentional. We'll see after the president speaks with the party chairman.
That's critical minerals, rare earths. Is that what you're talking about?
Yes.
Now, Bessent is making a very big assumption. He's making a gigantic leap that President Xi will have a call with Trump and work things out. But will this really happen? No matter how great their relationship is, as long as the US keeps trying to contain China's economy, it's going to be a bridge to nowhere. And here's a list of the recent moves the US just made on China over the last 30 days. They threaten a global hit on Huawei chips. If any third-party country buys the chips, the US might impose consequences on them. Next is banning chip software to China in order to hinder their progress. It's to prevent Chinese AI tech from ever catching up. Finally, Rubio promised to revoke the visas of Chinese students, basically to throw them out of US universities. Now, how are any of these friendly activities that are conducive to trade talks? So I really fail to see Bessent's optimism here. Without a doubt, if he wants Beijing to take the US seriously, there must be a serious rollback on all these sanctions. There's no way around this. China is not going to give the US the rare earths they need and fund their own containment. Anything else is just delusional. During the interview, Bessent also mentioned how China is on purpose curtailing global growth, that Chinese export restrictions are hurting the global economy.
Is to de-risk. We do not want to decouple, Margaret, but we do need to de-risk.
Making the United States less reliant on China. But at the same time,
and the whole world. The whole world, because what China is doing is they are holding back products that are essential for the industrial supply chains of India, of Europe, and that is not what a reliable partner does.
Now, firstly, there are many things wrong with this statement. It was the US that started a trade war that is crushing global companies around the world. And as part of their own retaliation, China stopped critical exports to the US. But it does tell us that the mindset floating around Washington is quite warped. China will always be the aggressor, and US containment policy is not going to stop. Global bank JP Morgan warned that China isn't afraid and they are not going to fold, that Beijing is not going to cave to Trump. They have a ton of money, engineers, and resources to throw at any problem. Now, Bessent was asked about that comment during his CBS interview, and his explanation is simply bizarre. It really highlights the level of cope and obfuscation being done to justify the trade war against China. Now, Bessent claims that the law of economics and gravity applies to the Chinese economy and the Chinese system as well. Now, there's nothing wrong with this statement. No country in the world can escape economic gravity. But Bessent failed to mention how dire the situation itself is in the US economy. The US has been trying to dodge reality for a very long time, and the piper is coming to collect. And this brings us to the big weakness being felt in the dollar itself. Now, this isn't a doom and gloom warning, it's a foreshadowing of what might happen if the trade war doesn't reverse. Firstly, the trade war is beginning to trigger a reversal in money flows. Now, Japan is the biggest investor in US assets, and things are reversing. We can see the yen starting to strengthen against the dollar. The yen carry trade is unwinding. People who borrowed the Japanese currency to buy US assets are suffering. Their borrowing costs are now higher because Japanese yields are higher as well. Plus, the dollar is collapsing, pushing the currency even higher. And everyone knows what triggered it. The tariff war signaled the start of the end. The idea of America being exceptional is now getting challenged. As a result, foreign money like Japan is starting to leave US assets and heading back home. So when Bessent talks about economic gravity, it's important to look at the biggest red flag for the US, which is the dollar. And if Trump reimposes his tariffs to make a point, he's going to create a US-China trade once again, and that would in turn smash the reserve currency even lower. Firstly, there's still a lot of room left for the dollar to fall. It has fallen by 10% from 110 to below 100. So import costs across the US, they have been flying higher, and it's going to fly higher. Once again, it doesn't matter if it's the importers buying inputs or consumers shopping at Walmart, prices are still heading up. And if things ratchet up enough and investors leave US assets, the dollar could fall even more. Another risk is if the economy collapses and the Federal Reserve steps in to print money, then we could see the dollar fall down to the 2020 levels or maybe even below that. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. So as investors, this is a very big issue, especially if you're a foreigner. Now the S&P might end the year with a 10% gain, but if the USD falls against your currency by 10% or more, you are still in the red. And to get the dollar higher or at least stabilize it, the US has to end the trade war. And whether that is undoing the tariffs or signing deals, something has to be done. But we are getting literally nothing.
When will we see an actual agreement? Will we see any this week?
I expected that we were going to probably see one perhaps as early as last week. And I think that one of the things that's happened is that the trade team has been focused 100% like a laser beam on the China matter to make sure that there are no supply disruptions because these licenses are coming a little slower than we would like.
Now, where are the 90 deals in 90 days? We were promised by Trump, Bessent, and Lutnick dozens or even hundreds of deals. Where are they? Instead, we only have the UK deal and Hassett saying that we will see one as early as last week. Well, what is he even talking about? So the pressures are starting to mount higher and higher on the dollar. And this is where Bessent is under tremendous stress to keep the entire system from breaking down. Now, if trade deals dry up, the dollar could likely fall as well. Holders of dollars would get screwed. And just 2 days ago, US bonds posted their first loss in 2025, and now borrowers are shifting demand away. Investors are shifting away from long-term US bonds. The recent 5-year auction is showing us that bondholders are afraid of lending Bessent money for more than a few years at the most. Yields on the 30-year is flying up, while the 5-year is staying steady. It's a clear sign that trust is eroding. Growth expectations are down, while higher inflation expectations are going up. People are starting to realize that these trade negotiations could take years, which is the more realistic outcome. Plus, the deficit is only going to balloon from the big, beautiful bill. Now, you would think that Bessent would promise to rein in the deficit, to promise the world that the US will be spending less, but he did the exact opposite. Now, he made two statements that are really disingenuous, and the first is saying that the deficit is already lower than last year and will continue to decline over the next 4 years. Now, something smells here. According to the bipartisan policy deficit tracker, it still looks like the 2025 deficit thus far is larger in this financial year than the previous one. It's over $1 trillion cumulative in April versus 860 billion over the same period last year. And the data came from the Treasury itself plus the CBO. Did Bessent really do his numbers right? And that's not all. Our good friend said that the deficit will continue to decline over the next 4 years. How is he serious? How is he going to do that with the big beautiful bill that's coming? He will be forced to issue hundreds of billions more in treasury bonds, and that's stacking more burden to the national debt. And there's no guarantee that revenue from the tariffs or additional growth will pan out. He's making a gigantic leap looking into his crystal ball. That interview was just a divination session at a tarot card reading. But the situation just got worse. Bessent also declared that the US is never ever going to default. The deadline for the debt ceiling showdown is coming, and he had to reassure the markets. We are on the warning track and we will never hit the wall. So the debt ceiling will be increased once again. It's the same playbook that all Treasury secretaries, including Yellen, they all subscribe to this. You have no choice but to borrow more to keep the carnival going. The US debt situation, the clown show, is just going to get worse. Now, raising the ceiling would delay a market meltdown, but the real losers here, once again, are the bondholders. Their holdings are about to get inflated away over time, and this time Bessent is really careful. He declined to specify an X date, which is when the Treasury runs out of cash. Normally, that date is used to scare Congress into submission, but Bessent knows better that the bond market is so fragile, so fractured, trying to specify the end of the limit is very dangerous. It could spike yields to the moon and trigger the very crash you want to avoid. However, we do have an idea it's probably in August, so we have around 2 to 3 months left before the debt ceiling is officially increased. The game is still going to continue. This interview was nothing more than a PR attempt to calm the bond markets down. Nothing can stop this debt and deficit train. We are still heading towards an eventual default. More bonds will be issued, and the only way yields can come down is the trade situation to really stabilize. Either a tsunami of trade deals are coming that are good, they are effective, or at least the China situation is resolved. And Bessent seems very optimistic on this front. Now, he affirms that 65% of the tariffs will likely be eaten by Chinese producers, so China exports will help subsidize the US consumer and prevent higher prices. If Chinese exports had the ability to absorb the tariffs, then shipments to the US would fly to the moon, won't they? There is supposed to be a tariff truce, right? Well, the numbers are just showing us another version of reality. Bessent is becoming a really good salesman. He's painting a very nice picture of what might happen. The operative word here is might, but the probability of his multiverse coming true is very slim. Despite a tariff truce, ships heading to the US are declining and not picking up. China has diversified their supply chains to the US, so there isn't an urgent need to sell back to the US market. Besides, Trump is so erratic that no one has confidence that the truce will stick forever. Things could always reverse in the next 24 hours. Importers themselves are too afraid of buying Chinese products as well. Remember that the tariffs are paid upon entry to US customs. It is not paid at the origin of shipping from China. By the time it crosses the Atlantic Ocean, the rate could jump from 30% back to triple digits, 145%, who knows? It's very risky. So the trade war is far from over. Underneath the bravado of his interview is really desperation. And above all, Bessent wants trade talks between Trump and Xi. But to be honest, it will be a waste of time. China is tired of words. They want to see a massive rollback of US containment policies, or it's no bueno. Beijing won't budge and Washington has trapped themselves. But let me know what you think. Is Bessent right or is he bluffing? And are bondholders the big losers? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.